Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is February 5th, 2019. Tonight we're going to take a look at the 10-year notes here. The ETF is IEF. The reason we're looking for that is it just triggered a trade range just in, I think it was either yesterday or today. So we're actually in a kind of a volatile trade range, but because of the last few trading days, we're actually in more of a consolidation, what we would term to be a more traditional trade range, despite the volatility that we've had in the last month or so. But we still have short, intermediate, and long-term trends all pointing to the upside, and the technicals are pointing to the upside. But we're at a kind of a limbo type period here with this trade range, and easiest thing to do is really just kind of show it on screen and show you what's taking place here. Here's daily bars for the 10-year notes. This is that volatile period where we've had some little surges and then reverses, surge and reverse, and we're in this sideways little consolidation. Got resistance way up here, and we've got some support, but it's kind of far away, so I'm actually using more the 50-day moving average for right now because the support is a little bit further away than normal. Now, a couple of things that are kind of important here. These little magenta dots that are down here on our power level, what those represent are what we term as a rocket market. This is when we've had the market has gotten a little bit ahead of itself, and it typically will show that the market's going to have a retracement. It's not a legitimate sell-off and shorting opportunities, at least on daily bars, but it is something that forewarns that the market has gotten ahead of itself and is likely to have a little bit of a reversal. So I'm just going to kind of show you one occurred at this point right through here where I'm pointing, right up against resistance, retracement, and then had another surge. Made another one. There's a red dot and a magenta dot, but the magenta dot was definitely up right here on that bar, retracement. Last couple of days, we just had another rocket indicator that popped up right through this little surge, and now we have a retracement. So what does this mean for us? Well, there's not a lot of support to the market, at least according to our signal levels. And so I would suspect that the market with this trading range is probably going to continue here. That's what we'd like to see take place. Eventually, the 50-day is going to come up to the market. Hopefully, the market doesn't come down to it too quickly. But as long as we can stay, above this mini support level that is not being picked up with these particular alerts here, as long as we can stay above that of the 50-day and some of these levels over here and can continue to consolidate, I would suspect that this trend level, or excuse me, this low energy level, which is what this is picking up, that's where the trade range is coming from, that we're going to start to pick up, and then we'll have a clear indication as to whether or not the market's going to support and head higher, or it's really going to find a difficulty really staying above the 50-day and starting to sell off. So let's take a closer look at some other tools that we have here. First thing is, if we come back to the website, just recently in the last short period of time, the last 4 weeks, because these are weekly bars, we actually had a surge high. That's what that surge was that I was referring to before in that rocket phase. So there was an indication that the market was going to probably sell off. The other thing I'm going to show you is that the trend level of all the markets that are out there, we've got Japanese and the Canadian 10-year notes, got gold and cattle muddled in here, and then we got the 10 years and the 5 years here in the U.S. And each of these is in what we term to be a strong trending phase. Despite the fact that the market's consolidating, the market has been in a bullish trending phase. So we have to, feel comfortable with that and realize that that is the primary focus to the market, the trending to the upside. I showed that in the deep dive here initially, that it was quite strong, short, intermediate, and long term, all pointing to the upside. The technicals point to the upside. So this little consolidation is a good thing if the market is going to continue to head higher. Now, just today, we had another signal that triggered on the long side, this along with three other positions. So net 4 systems, pattern base, trend, and trend. That's good indication. The pattern base will often be an early warning signal the market's going to head higher, and then the trend base start to really pick up. So we've had a daily system that's been in the trade for quite some time, but here with this most recent one on 60-minute bars, that just triggered today. So if we come back to the market, I would hope what's going to take place is that it consolidates a little bit longer. We eventually intersect with the 50-day, finding support to the market. At that time, we'll have a better indication as to whether or not the market is really going to continue to rally, come up to this level of resistance. And actually, if we look at weekly bars, this will give you a longer term perspective. Here is a resistance level way back here. It's not the strongest, but this on a weekly bar, you can see that all the way across here, that is giving some indication where the market was finding some resistance. Not the strongest, but we're always looking for where is the market finding some resistance. If we can break that weak resistance, then we're looking at some good money with a surge to either of these two levels right through here. So I'll give you the lower target, 124. That's essentially where the market could be headed towards. Now, for longer term traders, that might not be a big deal, but for short term traders, that would be the indication as to where the market could be heading towards. But we've got Fed meetings, and we've got action with gold. We've got interesting things that are taking place with our government right now that I guess a lot of things can happen. But I would suspect that if we come back to the daily bars and looking at that power level, not a big deal to see a little bit of a consolidation. That trend consolidation that I was talking about, not a big deal. The trend is still there. The trend is still our friend. We're just in a little sideways consolidation. Hopefully the systems will be correct and that we'll be able to maintain the 50-day moving average support. And if that's the case, then I'll be off the races with the markets, with the market. If not, just watch the systems, watch how they trade this particular position and start to unwind. That will be a better indication as to whether or not the trend that I've been talking about, using that trend level, whether or not that trend is done, or if it's just taking a breather and it's really going to go up and retest those levels that I was talking about on the weekly bar. So hopefully we'll see what does take place here. But we're in this little sideways consolidation. That's a good thing, I believe, right now, because it will help to sort of recharge the market and put us in a position that theoretically we can head higher, as the systems are certainly indicating. So with that, we will take a look at another market tomorrow. Thanks very much. Bye-bye.